Welcome to this explainer. Today, we're diving into two super impactful tax updates from August 10th, 2026. Look, whether you're a CPA managing a massive client portfolio or an everyday business owner just trying to keep the lights on and stay compliant, you're absolutely going to want to hear this. So, you missed an IRS deadline. Is it game over? Let's go ahead and crush that terrifying myth right now. I know, it's a stressful thought. You miss a date and suddenly it feels like the whole world is falling apart. But as today's tax brief updates prove, that is not always the case. Because believe it or not, the IRS actually does give second chances sometimes. Section 1. Deadlines meet tax relief. We're going to look at two distinct cases where taxpayers completely missed the mark, but the authorities actually threw them a lifeline. Moving on to Section 2, the 90-day BBA petition. This first update tackles that strict 90-day deadline to file a petition after a BBA Final Partnership Adjustment. Okay, to translate the legal jargon for a second, we need to talk about a jurisdictional bar. Think of it like a permanently locked door. You miss the deadline, the case is automatically dismissed. Door locked, boom, you're done. But, and this is a huge but, the tax court recently ruled that this BBA deadline is not a jurisdictional bar, meaning, well, that locked door can actually still be pushed open. The old fear was automatic dismissal, right? But the new reality is something called equitable tolling. In plain English, it essentially means you might get a pass. If you have a genuinely valid, justifiable reason for being late, you are not automatically out of luck. Section 3. Saving your S-CORP status. Let's pivot to our second update. Talk about a terrifying scenario for business owners. Losing your S-corporation status just because a shareholder trust failed to file an ESBT election on time. So normally, missing that paperwork immediately strips away your tax benefits. But the crucial point here is that the IRS looked at this and said, you know what, this was an inadvertent termination. Under Section 1362F, they actually granted the taxpayer relief. Why? Because it was literally just an honest mistake, not some kind of intentional tax dodge. Now, what's really interesting is the specific lifeline the IRS threw them. They gave the taxpayer exactly 120 days from the date of the ruling to go in and fix the error. For the CPAs and attorneys out there assembling your work papers, here's the bottom line on what they had to do within those 120 days. Step 1, actually file that late ESBT election, and Step 2, file any necessary amended tax returns to get the historical record straight. Pretty clean and simple, right? But obviously incredibly time-sensitive. Section 4. The big takeaway. Let's pull all this together into one actionable bottom line for your business. Yes, deadlines absolutely matter. You should always aim to hit them. But the law sometimes leaves a little wiggle room, like we saw with equitable tolling and inadvertent terminations. So, next time you think a deadline door is permanently locked, ask yourself, have you truly exhausted every single legal avenue? Or is your second chance just waiting to be uncovered?